Hey there. Let's talk through the basic process purchasing a home. Step one, you want to gather your income and asset documents. That's 2 years of federal tax returns, 2 years of W-2s or 1099s if you're self-employed, 30 days of pay stubs, all pages of bank statements for the last 2 months, all pages, even the blank ones. All pages of your most recent retirement statement, okay? Gather all of those when you call. Know where you've lived and worked for the last 24 months. Know the addresses, know the zip codes, right? You want to know all of that stuff or have all that stuff in front of you when you call. So you call or go on my app and get pre-qualified. Then you'll be asked to provide those documents I mentioned, and they'll be reviewed. Once they're reviewed, then that pre-qualification gets upgraded to a pre-approval, right? Your pre-approval says that you can shop. Your next step is to find an agent that you trust, right? Your real estate agent is typically going to help you find the home that you're looking for, negotiate the sales price, bring in a trusted inspector to make sure the home is in good condition, right? They're going to help you find a title company in most cases to make sure that the home's clear of any liens, right? Once you've gone into contract, right? Once you've negotiated a price and agreed on terms, then you've got 30 to 45 days where you'll work with your loan officer to supply the documents that the underwriter requests. You want to do that in a timely fashion. I'll tell you, treat every request from your mortgage company like it's an emergency. If you don't, then what you tend to find is you're not ready when it's time to bring money to the table to get your keys. And it's just not a good feeling. You don't want to do it that way, right? So you supply information to your loan officer as requested. Your loan officer will hire a third-party appraiser to go to the property to determine what they think the home is worth, right? If you're buying a home for $300,000 and the appraiser thinks the home is worth $295,000, that may be when you'll want to go back and renegotiate the terms of the deal. Again, that's where a really good realtor comes in. Once the home appraisal is back and all of your income documents have been reviewed and cleared, your asset documents have been reviewed and cleared, and anything on your credit has been reviewed, cleared, and resolved, then and the home has a clear title, right? Then the lender is going to issue an initial closing disclosure, which will basically function as a receipt, a rough draft receipt. And 3 business days later, you'll receive a final closing disclosure. That final closing disclosure is your final receipt. It has every cost associated with purchasing a loan down to the penny, and will have the amount that you have to bring to the closing table, resolved to the penny. You go to a title company, or these days, title company maybe comes to you with your driver's license. You've probably wired the money in advance. You sign your paperwork, and you get keys and you're a homeowner. So that's 30,000 feet up what to expect. In future videos, I'll break a lot of that down a lot further. All right, talk to you soon.